Well, good morning, everybody. Um, it's Monday, June 15th. Um, what I wanted to do was actually go over the setup I had posted last week on Friday on the pound yen. And so I'll go ahead and do that right now. Let's see, let me pull up what I had posted originally. Here's the chart that I posted. And I just wanted, and I pointed out that this 161, I wrote 60 area, roughly in the 60s here, between 60 and 70 was getting pounded. Everything was coming down. You know, it was kind of like this arch up here, but a lot of these are coming down. These red candles are coming down and hitting this area. I like to see when I like to call it when a level gets beat up, or a support gets beat up like that. I was looking for a break actually to happen here, but it didn't happen as quickly as I thought it would. So I was just saying, watch for a break of this 159, and when I say watch for, I mean at this 59 level, and when I say watch for a break, I mean for the candle to break below, and then hold and find resistance, trying to get back up above that whatever line I talked about. But as we look at the chart over here, let me move this out of the way. This is, of course, after today's move, but this is the move we were looking at right here. This was the candle that I thought was going to make the break, and it didn't. It just took a little bounce there. And then it broke the upper high, which probably would have thrown everybody off. It might have even chased me away from the trade. But then it came back down nicely. You know, of course, you know, if you like playing the range bounces, they make me a little nervous sometimes. Just because, you know, when you do a range bounce, or at least when I do a range bounce, they're not always right, and they can continue back up. What I just like to watch for are the range breaks and these levels that get broken, or the consolidation, which I've shown you before. I like watching for the breaks there because it just seems like a higher percentage of the time those are positive trades rather than losing trades. So anyway, it made its bounce here, and then it looks like this level right here, which is the 72 level, probably would have been a better place to put that line. But I like leaving a little room, especially when I was posting it for everyone to look at. I wanted to, you know, make sure that you didn't jump in on a trade. Like, let's say if I did have it here, people might have got in when this broke down, but it didn't hold. The candle bounced back up and broke even for that hour. So, you know, if it was here, it might have been catch a little more, but it did finally make a break here and go down. It made a pretty decent move. Like I said, this might have scared me away, and you know, it was Friday, end of the week. It can get a little spiky because some people clear out their trades. Some of the bigger houses and banks like to close their, you know, some trades out at the end of the week, clear the books for the weekend. They don't like carrying a lot over the weekend just in case of gaps happening and stuff like that. So anyway, I just wanted to go over that. And just another thing was too, this was considered a retracement. The overall trend has been up. Let me try and make this a little smaller. You know, this is a nice uptrend here. It's been happening for a while. It's leveled off for the Friday and today. And you know, there was good news for the dollar. Coming out of the G8 meetings, a lot of the keynote speakers that spoke actually showed a lot of support for the dollar, and the Russians even kind of flipped to the other side of the coin and said that, well, you know, maybe it is a little too early to write off the dollar right now, and there isn't. It might be too premature to try and find a substitute for the dollar as the world's reserve currency. So that gave the dollar a little movement today. Also, some announcements came out, or there's. I'm not sure if they announced them yet, but everybody knew what the announcement was going to be. That only the Treasury Department was going to release some statistics showing that Treasuries and U.S. equities and bonds and such went up for the month of May. I mean the month of April over the month of March. Um, so those were positive numbers, saying showing that more money's going into the dollar also, and so that propped up, and that's why the dollar's making the move that it is on the euro, and especially the chef. The sterling's fighting it a little bit. The CAD's losing ground, and the Aussie and the Kiwi as well. So anyway, that's the start of the week. I don't like looking for setups this early in the week, and nothing's really forming that I'm seeing. It's just making a run down right now in favor of the dollar. But just remember, if you're playing any shorts, especially on this pound yen, that is in a major uptrend right now, as is the pound dollar is in a major uptrend, in the middle of a major uptrend. This might be a little hiccup, or this might be a turn, I don't know. But if you play any shorts, just remember that you're playing it as a retracement, so don't look for as many pips as you normally would, because the trend is your friend, and when you go against it, don't look for as many pips out of the trade. Try and cash out with some rather than break it even or letting it stop out for loss. Okay, well, I hope you guys have a good week. I'm sure I'll try and think of something to post tomorrow. So anyway, you all have a good day. We'll talk to you tomorrow. Take care. Bye.